For anyone, the word recession brings up a sour mood. And why wouldn't it? Recession results in fewer business activities, which means fewer investment opportunities. However, if the person receives the proper guidance, a solution exists for every problem. Today, we'll be talking about how one can invest during a recession. As I said previously, recession results in fewer investment opportunities. Many people hence stop investing as there are limited chances of growth. However, one can still advance his or her investment portfolio provided he or she is given the right guidance. And that brings us to the topic of today. After this video, you will not only be able to know when and where to invest, but you'll also reap the benefits of your investments. Without further ado, let us begin. A recession is something you've got to live with. It will come one day, and you cannot avoid it. Hence, one should be well equipped to deal with it. Thus, before we talk about how and where to invest in a recession, let us talk about how to deal with a recession first. Human behavior plays a big part in investments, and thus one should first of all keep that in check before investing. First of all, relax. Don't panic and sell investments when markets decline. Depending on when you bought your investments, selling could result in large losses and a missed comeback. Many issues have affected the markets, causing recessions. Due to these issues, uncertainty may increase market volatility in the immediate future, so focus on long-term goals and ride through the inevitable bumps. Secondly, you've got to diversify risk to minimize losses. Investment diversification is crucial. Mix cash, bonds, and stocks. Check your risk profile. This is how much you can withstand investing losses for bigger profits. Moreover, you should minimize your expenses. Yes, this seems pretty straightforward, but all investment platforms charge for managing money, keeping funds, and trading funds and shares. Switching to a cheaper platform could enhance your fund's worth. Besides minimizing costs, you should also invest slowly and carefully. Timing the market or buying or selling stocks in anticipation of price changes is tricky. Instead, save money regularly. This guarantees pound cost averaging. Speaking of investing slowly, you should also be smart with your investments. Look for companies with excellent balance sheets and business concepts if investing directly in shares. Invest in sectors that will thrive regardless of the investment climate. If you have a good eye for an investment, then you're all set. Lastly, in a weak economy, investment prices may remain low. This suggests stocks may be cheap. Now this is your opportunity to profit more. Some fund managers hunt for undervalued, future profitable enterprises and later reap the benefits. Now you have understood the many ways one can remain in control regarding his investments, even if there is a recession going on. The aforementioned tips could even enhance your investment portfolio during a recession. However, let's suppose one is completely calm and rational with his decisions while a recession. Now, where should he or she invest? Stay tuned as we're nearing the answer to this question. You must have some investment opportunities in mind. However, it's possible that the types of investments that are most profitable during a recession won't be those you anticipate. The majority of investors make the error of becoming more conservative when the optimal strategy for the long run is to become more aggressive and increase their exposure to assets that have the potential to deliver possibly higher returns. During a period of economic contraction, it's important to lay the groundwork for the subsequent recovery of the market. The recession is, of course, more than just the decline in the market. It also refers to a slowing economy, which may result in your losing your job and putting you in other difficult financial circumstances. However, all of this can be rectified if you invest in the right place, at the right time. The investment opportunities I'm about to tell won't just work wonders in normal conditions. They will especially thrive in recession-stricken times. Let us go through them one by one. Firstly, we have stock funds. I know you must have heard about this one already. During a recession, one of the best ways to invest is in a stock fund, such as an exchange-traded fund or a mutual fund. A fund has a greater tendency to be less volatile than a portfolio consisting of a few stocks, and investors are betting less on any particular stock and more on the recovery of the economy and an improvement in market mood when they invest in a fund. And if you can handle the short-term volatility, an equity fund can provide you with the opportunity for substantial returns over the long run. Investors who do not want the inconvenience and hazards associated with investing in individual equities may want to consider investing in well-diversified funds instead. Trust me when I say, stock funds are the way to go if you want to improve your investment portfolio during a recession. You will surely be rewarded later on, provided you research the stock fund and were sure that it might increase after the recession ends. Secondly, let's talk about the high-yield saving account. Because recessions often don't endure for an extremely extended period of time, cash might be a beneficial investment for the short term. Having cash on hand gives you a variety of possibilities. You can spend it if you need to. However, it also gives you the ability to make an opportunistic investment if the stock market suddenly drops off, or if you locate the right house later on. Having an excessive amount of cash on hand, however, does come with certain drawbacks. Your savings may lose purchasing power due to inflation, and the interest you earn is unlikely to be sufficient to make up the difference. Invest your money in an online savings account that offers a high return, and be sure to keep it for when you need it for strategic needs. If you do, you'll be more than capable to handle any sort of recession anytime. Real estate has been at the forefront of many investments. Many people treat it as a safe investment, as it rarely loses its value. Real estate can be an appealing investment choice during economic downturns. To begin with, the prices of goods and services can be lower than they were when the economy was doing well. Then, when the economy comes up and people are flush with cash, the value of your real estate may climb. Second, you may be able to secure a considerably better mortgage rate during a recession when rates are expected to be substantially lower than ordinarily. You may even lock in an advantageous mortgage payment for possibly decades, so even if rates rise later, you still have that below-market mortgage rate. Over the past few years, a significant number of investors have successfully obtained 30-year mortgages at interest rates lower than 3%. They're paying back the mortgage with lower dollars, which makes real estate an appealing inflation hedge because inflation is expected to rise both now and in the years to come. To summarize, real estate is a really good bet and will surely help in bad economic times. Lastly, we have dividend stocks. These are all about volatility. You might want to consider including some dividend stocks in your portfolio if you want it to be somewhat less volatile in the long run. Your portfolio will move about less if it's comprised of high-quality dividend companies, since, on average, these equities have less volatility than other types of stocks, such as growth stocks. In addition, they may provide a cash dividend, which guarantees that you will continue to get some income even as you wait for the market to flip. Don't believe you have the necessary level of experience to choose your own dividend stocks? Investing in a dividend stock fund allows investors to benefit from the lower risk associated with diversification while still receiving a stable dividend return. In addition, you will receive a bigger overall yield if you make your purchase while stock prices are lower. Thus, there are benefits all around. You just have to invest. I hope by now you have understood the do's and don'ts of investment during a recession. After watching this video, you should be well equipped to deal with investment during a recession. What do you think about the investment opportunities we talked about? Well, we value the opinions of our subscribers, so feel free to comment down below. This is a wrap on this video. Hope you liked it, and if you did, make sure to press the like button. If you haven't subscribed already, make sure to subscribe to our channel. You can also tell me topics that you would like to see videos on. Until next time, adios!